We're counting down to the Reserve Bank's official cash rate decision. Most predicting we're ready for a cut. Let's go straight to Chief Economist at CommSec, Craig James. Craig, another historic low if the trigger is pulled today.
It will be a historic low. Certainly 3/4 of all economists believe that we will get a rate cut today. There's no certainties in life, only death and taxes, so it's not interest rate cuts. And if they don't cut today, effectively they're probably seeing something positive in terms of the environment. And we did know that in terms of home prices today, they've recorded a nice little gain, and we've also seen an improvement in commercial building today. Consumer confidence, is up. So the gentle turning point, which the Reserve Bank Governor has spoken about, so may be upon us. But certainly, so what the Reserve Bank Governor has indicated that interest rates are going to stay super low for a long period of time because there's still no signs, of inflation moving up into the target band. So we're around about, 15 seconds away. What we've seen, sort of ahead of the announcement today is that the share market was up around about 26 points. It's close to flat at the moment. The Aussie dollar's been rising slightly, sort of before the decision. So we're sort of bang on time, so now we're waiting for the decision to come out. Yep, and we have seen the interest rate cut today by 1/4%.
There you go, rate cut. So a new record low for interest rates set by the RBA in Australia, 0.75%. A double cut earlier in the year, clearly not doing as much as the RBA wanted then. There is already talk of another cut next year in February. But when we look at this particular decision right now, Craig James, we know the RBA, and we'll get through the minutes when we do get that available. But whilst there would have been, some concern at what's happening in housing, interesting to note, while the markets have been recovering, we're not seeing this big rush on lending still. So while we're seeing a bit of a recovery in Sydney and Melbourne, obviously the RBA not too worried and more concerned about inflation and jobs, the latest concern, which wasn't much of a concern, go back to a year ago.
It's a very, very, very difficult situation for the Reserve Bank where they have got themselves now. When you've got interest rates at 0.75%, which they are at, so currently today, sort of record low, ordinarily that would provide a degree of encouragement to borrowers to get out there and do all the work and activity investments they want to do, sort of waiting for interest rates to get down to these lows. But in a behavioural sense, what we could be seeing is that people are spooked by the super low interest rates. If interest rates are this low, a lot of people contend perhaps, so there's a recession around the corner. So am I going to take on new obligations, borrowing obligations in this sort of environment? So I think depositors certainly haven't got reason to be spending money, certainly with their interest income drying up. And those people who are borrowing a little bit reticent about taking on debt in this sort of environment. The question then becomes, what can the Reserve Bank do in this situation? I think what we've got to see is more pressure being brought to bear on the federal government, state governments, as well as sort of opposition parties as well, to come together for the good of the economy and come up with some stimulus and measures. It may require further rate cuts to be able to get this economy moving at a faster rate. And of course, so as you mentioned, so the thing is to be able to generate more jobs, get so that job market tightening up, wages starting to lift, and prices starting to lift after that.
Yeah, well, when it comes to those rate cuts, not much ammunition left. Craig James from CommSec, thank you for that. We're going to get more on this. We cross now to Sky News business editor Tikki Fullerton. She's joined by AMP Capital's chief economist Shane Oliver. Tikki, what's your reaction to this, expected cut?
Well, Tom, that's exactly right. As you say, 3/4 of the market thought this was happening. Shane Oliver, bring you in here. You thought it was going to happen as well. But is it enough?
Probably not. I don't think so. I think the Reserve probably has more work to do here. This was justified by the Reserve by downside risk to global growth, surprisingly weak economic growth in Australia, ongoing concerns about subdued wages growth and inflation, and they want to boost capacity utilisation. They want to get the economy humming faster. I don't think this will be enough. It will help. I don't think we're going to go into recession, but I do think we're probably going to need some more help from here.
You say, Shane, it will help. I mean, how will it help? Because one of the downsides of this is that it could be, you know, depressing as far as confidence is concerned in the economy.
It will, and yeah, people will say this is another record low. What do they know that we don't know? Things must be bad if they're cutting down here. So there's that downer. There's also a downer for people like my mother, self-funded retirees or on the partial pension.
Yeah, going at their deposits.
Their deposits, her interest rates getting lower and lower, almost disappearing. So they're the downers there. Against that, though, the value of household debt in Australia is double the size of bank deposits. So when you cut interest rates, there's a huge, huge benefit out there for those with a mortgage. And some of them will be getting, if you get if 0.2% of this 0.25% cut is passed on,
yes,
combined with the rate cuts we've seen already, that's a saving on a $400,000 mortgage of in excess of $2,000 a year.
Well, here's my next question. What are the chances of the big four banks and any of the other banks, indeed, passing that full cut on, do you think?
Lowish.
Yes.
One might to get market share.
Yes, ANZ's been picked to...
Yeah, there has been some talk about that, and... yeah, fair enough. But I think on average it's going to be less than 0.25. From memory, I think if you average all the banks, the first cut in June saw a 0.23% pass through, and the next one was about 0.22 or 0.21, so it's getting less. And so the banks are under a little bit of pressure here because their deposit rates can't go negative. So therefore they won't pass the full amount on average. But I think they'll at least pass 0.2% on. And when you add that up with the rate cuts already, someone on a big mortgage is probably already saving about $2,000 or so in interest costs each year. The other thing is, cut interest rates keeps the Aussie dollar down at 67 cents, whatever. 7 years ago, what were $1.10 or something?
Yes.
Where would we go for a holiday? Everyone was going overseas.
But there's been this expectation that the Aussie dollar would react to a cut. Now, it didn't really react the last time we had a cut, did it? Didn't get weaker suddenly.
No. It all
bank?
depends on what they say, and I reckon they've said enough here at the end. They say it's reasonable to expect an extended period of low interest rates will be required. The board will continue to monitor developments, including in the labour market, and is prepared to ease monetary policy further if needed. All of those things, I think, have left the door wide open for more cuts, which I think is why the Aussie dollar on the back of this news fell. When I last looked at it, it's actually gone back up. 67.
Well, yeah,
it's bouncing around all over the place, but 67.50 is roughly where it is.
So presumably we're expecting Philip Lowe in his speech tonight to continue to deliver that message in the hope of driving that dollar just a little bit lower.
I think he will. I think he's... I mean, it's interesting. The last two meetings, there was no cut from the RBA. There was no meeting scheduled by Philip Lowe. The two meetings in June, July, there were dinner presentations by Philip Lowe scheduled. There is one tonight. I think he will explain why they've done this, where they expect the benefits to come from, and I think he'll leave the door wide open for further rate cuts.
So what's your thoughts on that?
I think we're going down to 0.25.
But not on Melbourne Cup Day?
We'll go to 0.5 on Melbourne Cup Day, which
you think next month we'll go for another cut?
I think we'll have another cut next month, and that'll be that for this year. So we'll end up at 0.5 by the end of the year. Early next year, we'll go to 0.25, simply because I don't see growth picking up enough to get unemployment down, to get wages up, to get inflation back to their target.
So you think that the bank will go all the way to 0.25 rather than any other sort of QE or...
Then they'll do the other things.
Now, Peter Costello has come out and said, look, it's not going to work, any sort of quantitative easing, and he's also said that really that's not. It's not going to work because it's not like 2008. We're not in a crisis, and then the argument runs that because we're not in a crisis, why are we losing our cushion here? Because there just might be a crisis around the corner, and then what do we do?
Well, it's all about heading off a crisis. Don't forget, in 2008 we did not go into recession. We didn't go into recession because the Reserve Bank aggressively slashed interest rates, 100 basis points, 0.75% at a meeting. Then we had the stimulus payments out of Canberra. The Aussie dollar fell from 98 cents to 60 cents. The Australian economy didn't go into recession because they reacted quickly. This time they don't have to react as quickly, but I think the Reserve Bank is really doing the right thing here to head off a crisis. I don't agree, and I think there is more they can do. The history of central banking around the world in the last decade has been that they do all they can on interest rates, get it down to close to zero or just above, and You look at the ECB and others, they've all gone down to zero, and then they've looked at the alternatives. At which point I think the Reserve Bank would say, well, we can provide a bit of help with quantitative easing, but I think at the end of the day, I too am of the view that it really, the baton should be passed over to fiscal stimulus.
Briefly, where does this leave your mother and her deposits?
She's not going to be very happy, and she's going to be very unhappy with me because I have a mortgage, and so I'm feeling okay, but she's not. And I can understand that, but the maths are such that the benefit to those of us with a mortgage swamps the loss of income for those like my mother, unfortunately.
And hopefully we'll spend. Shane Oliver, thank you very much for joining us.
My pleasure.
Back to you, Tom.
Tiki, good to get the update there on the next predicted cut. And, of course, Shane Oliver's mother, thank you. So, look, big news today, the cut in of itself. But interesting from Shane Oliver there that he predicts one coming for Cup Day as well. There you go.